Good morning, a warm welcome. Sage here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some of the key highlights and happenings from yesterday, starting with the US market. And the global equity markets gave up recent gains on Wednesday, while the US Treasury yields fell to a two-week low as traders weighed continued positive corporate results and a resurgence in the US-China tensions that could compound supply chain worries. The MSCI World Equity Index, which tracks shares in 50 countries, was down 0.2%. And the benchmark US indices closed mixed on Wednesday, 27th October, as investors delved into the company's quarterly earnings and sought to catch up with their latest developments. The S&P 500 was down 0.51%, the Dow Jones fell 0.74%, the Nasdaq Composite stayed flat, and the small cap Russell 2000 was down 1.90%. On Wednesday, the Commerce Department said orders for durable goods like appliances and automobiles fell for the first time in September since last spring. New orders declined by 0.4% in the month from August, after 4 consecutive months of gains. The data renewed concerns over supply woes and rising commodity prices. Communication, technology and consumer discretionary stocks were the top gainers on the S&P 500 on Wednesday. Energy and financial stocks were the bottom movers, and 8 of the 11 stock segments of the index stayed in the negative territory. Around 82% of the 192 companies that reported quarterly earnings beat Wall Street expectations, the Refinitiv data showed. Shares of fast food chain McDonald's Corporation rose 2.60% in the intraday trading after its third quarter net income rose to $2.14 billion, up from $1.76 billion a year ago. The beverage maker Coca-Cola company's stock gained 2.30% after it raised its fiscal 2021 outlook. Its revenue jumped 16% year over year to $10 billion in the third quarter. Let's move on now to Europe. European stocks slipped from near record highs on Wednesday, with miners leading the losses after concerns over China hit the metal prices, while mixed corporate earnings reports and an upcoming central bank meeting kept investors on edge. The Pan-European Stock 600 closed 0.4% lower after coming close to a record high on Tuesday. And the UK shares hovered in the negative region on Wednesday, 27th October, with the headline FTSE 100 snapping the 3-day gain and the mid-cap reflector FTSE 250 struggling to hold the marginal gain due to mixed earnings and market-wide subduedness due to the autumn budget 2021 presentation. The Chancellor of the Exchequer, Rishi Sunak, unveiled the autumn budget today, announcing a wide range of protective measures for the ailing industries to augment the pace of recovery. The global heaviness amidst the capital markets has been weighing on the London equities, with the major round of earnings coming to an end. However, a set of blue chip companies are yet to report the quarterly figures in the upcoming days, as oil and gas company Royal Dutch Shell, British cigarette maker American Tobacco and financial institution Lloyds Banking Group prepared to release the financial results on Friday, 28th October. In the next week, the large cap corporations, including oil and gas company BP, telecommunications group BT, banking group Standard Chartered, bookmaking holding company Flutter Entertainment, chemicals company Croda International, clothing company Next, medical equipment manufacturing company Smith & Nephew, supermarkets giant J. Sainsbury and airline company IAG are slated to release the earnings report card. And the benchmark FTSE 100 traded down 0.34% from the previous close of 7,277.62. The mid-cap index FTSE 250 surrendered the gains in the terminal trade, up 0.08%. Let's move on now over to Asia. And Japan's Nikkei share average recovered from the early declines to end Wednesday, little changed as the strong earnings supported the market despite overall caution ahead of a parliamentary election on this weekend. The Nikkei slipped less than 8 points to close, maintaining most of the previous day's surge of about 500 points. The index earlier sank as low. China's shares closed lower on Wednesday, led by coal miners following Beijing's latest move to address the skyrocketing prices, while environmental protection-related companies advanced on the country's plans to hit a carbon emission peak before 2030. The blue chip CSI 300's index ended down 1.3%, while the Shanghai Composite Index lost as well 1%. South Korean shares fell on Wednesday as traders booked profits after 2 straight sessions of gains, with focus on Samsung Electronics earnings on Thursday. The benchmark Kospi ended down 0.77% after gaining 1.43% in the last 2 sessions. Finally, the Australian shares may open lower on Thursday after commodity prices fell as China further ramped up its efforts to check the coal prices. Market sentiment was also in the negative zone after the US shares ended mixed overnight and oil prices tumbled. The ASX 200 ended the day marginally higher on Wednesday. The Australian dollar surged after a surprisingly strong reading on core inflation propped up market wages on early rate hikes and sent short-term bond yields to their highest since late 2019. The Australian dollar popped higher on Wednesday after a surprisingly strong reading on core inflation fueled the market wages on early rate hikes and sent the short-term bond yields to their highest since late 2019. The Aussie dollar added 0.4% on the data, and the yield on the 10-year US Treasury note dropped 0.07 percentage points to 1.54%. Let's move on now to some of the newsmakers. And ANZ reported a full-year cash profit from continuing operations of $6.2 billion, beating expectations. It was 65% better than a year ago. Commonwealth Bank revised its 2021 Australian GDP forecast from 3% to 3.5% and from 4% to 4.4% in 2022. Trading marketplace hipages Group's total revenue was up 14% from a year ago, while recurring revenue rose 17%. And lastly, let's take a look at the commodities market. And oil prices fell after the US crude oil stockpiles rose more than expected. West Texas Intermediate crude oil fell 2.89%. Brent crude oil's international benchmark fell 2.50%. Prices of safe haven gold eased in choppy trading as strong tech earnings prompted some investors to opt for riskier assets. Gold jumped as much as 0.22%. And thanks for joining us in the report. That's all for now. Keep watching Kalkine TV for more market updates. Sage signing off.